get a lifetime of knowledge.
Let me call Mimi.
I saw your post. I need to take one.
Yeah, we can do it of this too. I don't know what to do. I feel like a millennial.
Oh, wait, hold on. I need to get myself. There we go.
Funny.
It's pod number 1. Microphone emoji. And then a timestamp. 6:48. Thanks, South Africa. I'm actually going to say it's go time. Sometimes I forget to choose close friends and it just goes to everyone. That happened last time. I was like, no.
Yeah, I know. Yet. I'm not there yet. I'm not mentally prepared. Yeah. The day that we post this on LinkedIn will be hilarious.
I know.
If we ever even get there. Oh my God, that is such a good photo. My shirt is neon.
Yeah, looks good. Also, a personality pick.
I know. I was like, I could wear a white t-shirt, but no, I must put on the brightest shirt
A brightly colored blouse. I am still, however, in my leggings from Pilates at 8 a.m. this morning.
I'm wearing these shorts on the bottom, business on top, comfort on the bottom.
There you go. That reminds me of taking pitch calls and I had like sweatpants on the bottom. Yeah.
At 10 p.m. at night.
Yeah, I think that's how the world operates these days.
I'm excited to hear about Shalina. Tell me about Shalina.
Yeah, so Shalina is great. She'll do a bit of background on her come up in traditional finance and what led her to found her own wealth management firm, which is skewed towards women. I know her because she's actually my parents' wealth manager. Yeah. So she focuses on couples, but really she'll explain why a female lens in her approach, because I think a lot of her background in more traditional finance roles, she just realized that there was not an empathy or even an emotional understanding of what women care about and think about and need to consider when looking at their finances. She's great and super mobile, and so I'm excited to have her on. And I think that it's just an interesting time. A lot of our friends are starting to get married, even if you're not getting married, or having this conversation moving in with their partners. And some stats that I found very interesting are that 62% of couples keep at least some funds separate in the US, according to a Bankrate survey. It says 38% share joint accounts exclusively, but 62% maintain some sort of mix between joint and individual. So it seems like that's the most popular arrangement.
Most popular being there's one joint and then separate?
Yeah, a mix of both.
Okay.
Yeah. Or like, you both maintain separate.
A blended finance.
A blend, as we say.
Yes.
And it says millennials are more likely to have separate funds compared to older generations, which I think makes a lot of sense.
Yeah. I think that's also interesting with the conversations we've had, because we have friends who were like, I will never merge my finances. And also, I guess that's interesting to our point of what we were saying with what we've learned from our parents is some people are like, I will never do this. My parents' relationship to money is so unhealthy, and I've seen that because one person controls everything. Totally. Where I've seen other people, and I'm not going to throw this person under the bus, but they made me laugh when they said this. They were like, maybe when I get married, I'll just have my business send my monthly paycheck to my husband's account. And I was like, do not do that.
Different strokes for different folks.
Totally. All sides of the spectrum.
Another study also said that merged finances were linked to greater marital satisfaction and stability.
I've seen this.
Showed that couples who pooled finances report higher relationship satisfaction and over time less decline in relationship stability. So I think that also opens up the conversation that it's not just about the finances themselves, it's about the communication surrounding that and the trust and the shared interests. So I wasn't all that surprised to hear that, but given that people are choosing more and more to keep things separate, I think that's worth considering.
Totally.
And another interesting one was that 43% of people, I think this is just in the US, admitted to engaging in financial infidelity. So
what does that mean?
According to Bankrate, nearly half of couples have hidden expenses, debt, or secret accounts.
Oh my God, hectic.
Yeah,
that is crazy. When you said financial infidelity, I was thinking like they secretly bought a Prada bag versus hidden bank account.
Yeah, like hidden expenses, I guess could go either way. Hidden debt. I think that's an interesting thing for Shalina to get into is like at what point do sometimes debt that you're unaware of become a bigger issue, especially if you're married? Is that automatically shared?
And can you like check your partner's credit score? Is that a thing? Like I don't know. These are the things we should know.
Yeah.
Is debt tied to your credit score? Like how much debt you hold?
Totally.
I have literally no idea.
Totally. And I think I think it happens more often than not. I've seen on a lot of Ask Me Anythings, people being like, I just found out that my boyfriend has tens of thousands of dollars worth of debt. What do I
Yeah.
do? And I think it's more common than you think. And so at what point in a relationship do you bring that up? And how do you guys approach that? So lots of interesting facts and figures around that. And I'm super curious to hear Shalina's take on how to approach and better manage and hopefully avoid some things such as financial infidelity.
That's so crazy. Wow. I totally understand why someone would do that. If you're like, I'm horrified by my spending habits and I'm in terrible debt and you're embarrassed and you don't want to tell your partner.
Totally. I'm also excited to get into with Shalina. When women more traditionally step away from the workforce and therefore have no income, how do you approach conversations for long-term finance when you're not bringing money into the home, but you're enabling your partner to go out and make their money? That actually was written in by a listener. So
nice. Yeah. Very exciting.
Yeah.
Oh my gosh. I'm so excited. I think we need more than one conversation to cover the topic. There's preparing to merge finances, then actually merging finances, then to the point of what if something goes wrong. It's super interesting. I'm very excited.
Amazing. Okay, cool. Let's bring her on. Please note that this pod is for educational purposes only. Nothing we say should be taken as financial, legal, or medical advice. Please do your own research, and when in doubt, ask an actual expert.
Hi, Shalina.
Hi, how are you?
Good. How are you?
Doing well.
Thank you so much for being here. Is this your first ever podcast?
This is my first ever podcast.
This too. This is our first recording with an expert. So we're very excited.
Yeah, we so appreciate you taking the time. And when we told our few listeners that we have already that you were coming on and that we were going to be discussing merging finances with partners, a lot of questions came up. A lot of our friends are in this conversation. I'm in this situation. Caitlin just got married. So we're all in the same boat and we know that you have a great perspective about it. So thank you truly for being here.
We realize there's so much to cover on a lot of these topics.
Yes. And I'm in an industry that's highly regulated. I have to kind of preface this as we're having a discussion, but none of this is personal baseline.
Absolutely. Okay, amazing. So that means I get to say welcome, Shalina Martos, to Actual Experts. We are so excited to have you on. You are, of course, a founder of Martos Wealth Management, which is an RIA, a registered investment advisor focused on women, couples, divorce planning, and some impact investing. We're going to get into a little bit about your background and why you made the move from traditional finance over to starting your own firm. But before I do a quick little intro to how this is going to go, we've decided to maintain a bit of a unique dynamic between Caitlin and myself. So I have done most of the research for this, and Caitlin is going to come in blind. She hasn't done any of the research. So she is taking the perspective of our listener, which means that she can ask the questions that come up as we go.
We're all trying to get better every day.
Exactly. Perfect. So to begin, I'm going to let you know a little bit about my background. I'm engaged recently to my fiance, Luke. I've been living with him for over a year now. We've been together for 4 years. So we do have some merged finances. We have a little account that we use to buy our groceries together. We pay our rent together and we split that based on income. So it's not a 50-50 split. We are getting married next year. And so we're starting to have this conversation more seriously and for the long term. And so there will be lots of questions that hopefully I will get to take a lot from, and I'll let also give some background too.
Yes, I got married in April to a South African. So Lundie and I are both with South Africans. I got married to Stephen in April. We have just moved to Canada from South Africa. We decided to merge all of our finances and have full transparency on everything. So we have separate accounts, but we have logins to each other's accounts. We know everything that's going on both sides. And I mentioned to Lundie earlier, we are both very open and have constant conversations around how we want to invest and save our money. But I'm sure we're going to learn a lot. And I'm probably going to come back and annoy Stephen after and be like, I learned all these things and we're changing everything. But very, very excited.
Perfect. Shalina, what made you really want to start focusing on the female experience with your firm and with financial wealth management more generally?
Yeah. Ooh, that's a big one. So just to keep it short here, I started my career in finance at the old Miss Barney about 20 plus years ago. And I've been in the industry working for Bank of America, Schwab. So that is on the retail side where they can sell you products and that's fine. They're there to make money. However, about 10 years into my career, I found the RIA space where it's fee-only fiduciary, which just means that I only get paid by my clients. So I'm not incentivized to sell you anything, and nobody's paying me anything on the backside. So the conflicts of interest are completely removed there, and I've stayed on this side of the industry since becoming a financial planner. And being a fiduciary is just extremely important to me. My values are always aligned with my clients' values, and we're going in the same direction at all times. And I can always do what's in their best interest. That is where I'm at and where I'm continuing to stay. The reason that I decided to open my own firm and focus on women is because throughout those 20 plus years, I've been in meetings where well-intentioned couples and women are in there and they all have the same goals, but the women tend to just be more quiet. I want them to speak up. I want to empower them. I want to educate them, and I want to continue this conversation for equality. I just haven't seen the changes that I want in the industry that I work in. And so how better to get an equal voice than to just give it to myself?
Absolutely. And then that women and men approach the conversation differently, just inherently.
Yes. And one of the things that I've done in my firm is I'll always ask each partner their risk question separately. They never fill out a risk question joint because oftentimes it comes back completely different. And a lot of times I'll say things that are in general, but of course this does not apply to everyone. In general, men seem to want to take more risk, and in general, women are a lot more conservative. And so as long as we can have a conversation about who's taking more risk, or if you want to take, or we always look at the entire household. So one may be more risky, one may be conservative, but as a whole, you're right where you want to be. And that's an important conversation.
The interesting thing for me around women being more conservative is that I've heard a few times now that women are stereotyped as being more conservative, and then they sometimes pay this tax of their advisors, put them in a more conservative bucket, so then they don't earn as much as maybe their male counterpart. When someone comes to you like that and fills out this form and says, hey, I'm nervous about money, I want to be more conservative, how would you approach that conversation with them around maybe you should lean a little bit of a different way?
Absolutely. And this comes back all the time. I just recently last week had a risk questionnaire come back from an individual who's female, and it was like, I don't want to take any risk. The conversation that we then dive into is, here are the trade-offs if you do this, and this is what I see for you given what I know about all of your finances, given all the conversations that we've had together. So a lot of this is very much start the conversation with your advisor, be in communication with them, and make sure they know your investing personality, because I was able to explain that to her, and then she's like, oh yeah, totally, no, we need to be over there. And I'm like, okay, let's do this. A conversation about what that means. And I think women get hesitant to answer the questions because you're right, they are answering the questions more conservatively, but they don't actually want the result that's going to get.
Right. I think that's what the value is of having an advisor who looks like you and thinks a little bit like you and understands where more so women traditionally or stereotypically are coming from, because then can speak each other's language and kind of break it down in a way that makes you understand, oh, I didn't mean I was risk averse. I just meant I thought of it this way. That also brings up something that we came across a lot of the conversations with our friends around how our upbringings and our familial relationships and our parental relationships really shape how we approach money later in life. We're seeing that a lot with friends who are explaining that they will never merge finances with their partners because they saw money be used as a controlling factor in their parents' relationship and they don't want that, or the total opposite end of the spectrum. So do you see that a lot, just that people come in with their own familial dynamics that live on with them?
Absolutely. We all have that foundation that was laid early on, and some of us are trying to undo those bad habits, and others have a really good foundation. And then the challenge becomes merging that with the person that you are partnering up with, getting married, moving in with, whatever the case may be. And each individual has those preconceived notions. And so I think what you'll start to hear me say and encourage you to do throughout this talk is, like you said, Caitlin, keep the communication lines open, be completely honest. If there's nothing going on, then everyone's honest about everything, and you've got your logins, and I would recommend making it a habit and checking it every month like you would do your personal finances. Just remain engaged. I see a lot of women get, especially when they start to have kids, they have a lot of responsibilities. There's that mental load. If they're not getting enough help from their partner, they don't have time to also then go log in every month and check the finances. But I would say that's just as important as raising a child. Just keep tabs on it. Know where your money's going. You're a partner with another person and you've sat down and you've established these goals. One of those goals was having kids and raising them together and having a beautiful family. That's all part of it.
Totally. Yeah, that's amazing. That gets us into kind of the practical advice side, which is a lot of why we're here, which will bring us nitty gritty then of the conversation. We have decided to structure these episodes and title them all in the same way, which is essentially what the fuck is stuff. And so this being our first, what the fuck is merging finances with your partner? What does that even mean? What does that even look like? Moving to the more practical side of the conversation, we had a friend of mine from home in LA who wrote in and said, what if you want all of his money, but you don't want him to have any of yours? And then she said, just kidding, just kidding. But do you, you know, that both sides of the couple keep a personal account and then they have that joint account? If so, then how do contributions work? Is it income based? Is it 50-50? Obviously case by case on the couple, but do you see a certain formula work best?
The short answer is no. There's no baseline that works for everyone or most people because we're all such unique individuals. It is going to be so personal. And if you can just sit down with your partner and open up these discussions, okay, we're getting married. How much debt do we have? Who has what amount of debt? And start to make a plan as a team. I think as long as both people feel like they're involved and knowledgeable about what's going on, there aren't going to be any issues. But it's all, as that evolves, we all start out great. And then I'm a divorce financial analyst, so I've seen the other side as well. Nobody plans to get divorced, of course, but after 20 years of raising kids and not having a career, and then they call me and they're like, what am I supposed to do? I've never managed the finances. I'm not involved in anything. I've been raising the kids. Right. It's just like, I'll reemphasize, stay engaged, and that way you can kind of keep up with things.
Yeah, absolutely. That brings us actually to two kind of splits of the same conversation. You mentioned both. If someone in the couple has more debt coming into the situation, or alternatively, if someone in the couple has more income, which I think is almost always the case. I want to go in a little bit further into if traditionally women tend to step back from earning income more, what that looks like. But how would you say you approach it if one side of the couple, regardless of the gender, has more debt?
Yeah, I would say there are a lot of different situations here, like levels of debt. It could be $10,000. It could be student loans of $300,000. So number one, what is the amount? Do you feel comfortable? Like, I doubt anybody's going to say $10,000 would make a huge difference on, hey, we have to make a plan that, hey, that was your debt, not mine. But when you get into $100,000+ debt, I would say definitely have an open conversation about that, and or perhaps bring in a third party to talk about it. Like, what about, if we were to ever get divorced, which we're not going to, but 20, 30 years down the line, this might come up and you might need the document that says, I get an extra $100,000 from the house of this sale because we paid off your debt.
Totally.
And you're going to stay married, you're going to have a happy life, but it's just being safe and protecting yourself so that you don't then 30 years later have to talk to a lawyer about, I think we paid off a $200,000 student loan back in our 20s or 30s.
Right.
You move on and you're not thinking about it.
Makes sense. That's actually a whole other episode that we have planned is what the prenup, post-nup and a mid, because those are also questions that are being raised. But that makes sense in terms of laying it out. And then that comes to the other side of the coin, and one that listener and friend of ours wrote in about, which I think is a very real situation for many of us and primarily women, but it could be either. If someone takes a step out of the workforce for a long period of time to raise the kids or whatever that may be, how do you approach that conversation when it comes to income and the shared finances being actually from one side and separate accounts not being necessarily possible in that case?
Ooh, that is a tough question. I would say that, and my apologies in advance, my bias is going to come in here because I'm always about having women protect themselves ahead of time so that if anything happens in the future, it's not a big deal and you're not super stressed about losing everything or not getting a dime. And so I would say if you're going to step out of the workforce and raise the kids. In my opinion, that is way more important job than going to the office every day. Unfortunately, our society doesn't place a huge dollar value associated with all of those things that you have to do to run a household. So I would say that number one, it's important to have a partner that feels like the person that's staying home is just as important as going to work. Even though you are not bringing in a paycheck, you are probably earning more, if not equal, to whatever your partner is doing. Even if they make $300,000, $500,000 a year, by raising the kids, you are allowing them to go do their thing, right? Because you're a team. Right. You're a team in the beginning and hopefully always. You're always working towards something together, and it's important to choose a partner that feels that way and lifts you up and encourages you. A lot of the times I see women are at home raising the kids. No one's thanking them or giving them a promotion or congratulations on this or that. And a lot of times they feel extremely isolated and alone because they're doing a just as important job as the person going to work. Raising kids is one of the most difficult things you can do.
Do you see that with clients, even in the most well-intended of relationships where there's money being used, even maybe not maliciously or intentionally, but as control? And what do you do in those instances when you're approached with those couples?
If money is being used as a control item, in that case, it's even more important to have that joint account and make sure the paycheck goes into that joint account, because money being earned is being earned by both people. And so if the other person can't agree to that, maybe that will give you some pause and or another reason to have an additional conversation. But I would make sure that if you're the one staying home, you are involved in every aspect of the finances as much as you can be.
That makes sense.
Just to jump in there, a lot of these scenarios are scary for people to hear about, that these are potential situations that you can fall into or accidentally get yourself into. Bringing it back to that initial conversation that you have with your partner at the beginning and saying, okay, I want to talk to you about finances. How would you advise someone to structure that conversation and come in and set themselves up for success so that no one feels offended or no one feels like they're being attacked, but it's two partners coming together to have an open conversation?
Yes. Okay. So this is excellent. Here's just a general outline. And once you go through these line items and it's all laid out on the table, you will start to feel like it's more of a partnership and using these finances for your overall goals. I was thinking about the things that I recommend to people today, and I'm like, how can I make this catchy and memorable? And so I came up with ABCDE, skip a couple, H.
I love it.
Start with assets.
And what does assets mean?
Okay, so I can list that off. Bank accounts, retirement accounts. Do you own a home yet? Are you potentially expecting an inheritance from any family member? What does the background of your family look like versus your partner's family look like? Is there a large imbalance on one of those? Just take a look at everything that you personally own. Write that down. Make sure that you know what you own and what the other person owns. So that's assets. We'll get to debt on D. But especially when you're getting married, you want to think about your beneficiaries on all of those accounts in which you can name beneficiaries. So the accounts I just listed, bank accounts, transfer on death, IRAs, you can list beneficiaries. It's most likely going to be your spouse, and you designate them, they designate you. That's a sweetheart deal.
So benefits is B.
Beneficiaries is B.
Okay, got it.
I have two C's because the first one is communication, but the second one is cash flow.
Okay.
And just like you said, take a look, who's earning what's coming in after taxes, and is that going to a joint account? Are we doing our own account, etc.? So cash flow.
Cash is earnings, so like our salaries.
Yes.
Okay, got it.
Yep. And then debt. Do we need to come up with a plan on how to pay this off? Are we looking at the prenup because the debt level is high, etc.?
I have a question around debt. We spoke about this earlier and maybe this will come into the ABCs of all this, but with debt, does someone's debt affect their credit score?
Yes.
Okay, we didn't know this in advance. And your credit score, and correct me if I'm wrong, is also affects your ability to get a loan to buy a house. Okay.
And one of the things that you can do to stay engaged and avoid the financial abuse is check your credit report annually.
Okay.
In addition to logging into your accounts monthly, check your credit report annually. And you probably already know this. You can do this for free once a year.
Didn't know that.
Okay, for free. Okay. Once a year, annualcreditreport.com. And it will check Equifax, Experian, and TransUnion.
Okay.
Those are the 3 companies that keep track of your credit.
And that's in the US. So there's probably equivalent ones for other countries.
I can't speak to that, but I hope.
Okay, that's totally fine.
Yeah.
Can you check someone else's credit score, or can you only check your own? As in, I was thinking of getting married and I'm planning on having this conversation with my partner, and I'm doing my due diligence beforehand, and I check their credit score so I can come to the table knowing, is that possible? Can you check someone else's?
It depends on the trust, because that person would have to provide their social security number too.
Got it. Okay.
You want to protect your social security number at all times.
So
but
come to the table with your credit score, maybe, as part of the conversation.
Maybe not on the 3rd date. Maybe
No, during the ABC conversation.
Yes,
during the ABC conversation, everyone comes with their credit score.
There you go.
Their credit report. Okay, we got it.
Exactly.
Love it.
Yeah. So that's part of the debt conversation. And then E is for estate. Okay. If you're getting married, and that leads back to beneficiaries, really.
Got it.
Is this your first marriage, your second marriage? Are there kids involved? How do you want the assets to flow if anything were to happen to both of you when you're traveling, etc.? So it's just, estate is maybe last, but definitely you need to have it top of mind when you're thinking about your overall want to cover with.
I have a question to do with estate. Is a will required for estate to hold in the case of, God forbid, something tragic happening, or can you just write that down and have a mutual understanding and hope that they'll hold up that end of the bargain?
I'm not a lawyer, however, you can die without a will. And then what that means is you leave it for the United States, you leave that to the state to decide who's going to get your money, how the estate's going to be liquidated, where those funds are going. I've actually seen that situation firsthand. Nobody was listed, nobody was on the accounts, there were no beneficiaries and no will. That's not ideal. Right. You can die without a will. It is not ideal because, of course, your estate is going to be paying the fees before any money gets disseminated. So you have to think it through. Do you care what happens to your money when you're gone? Most people do, but if you don't, it doesn't matter.
An estate is such a funny word because I feel like we hear it and we think very ultra wealthy people manage their estate and they have these things, but it sounds like essentially it's just you and your partner and what you own under the umbrella of you two together and figuring out what happens.
And that's correct. And our H comes in under that umbrella because it's healthcare. And part of that estate is designating if anything were to happen to you and you can't make the healthcare decisions for yourself, who are you going to designate to make those decisions for you? It's important to have that legal document for that person to take with them to the hospital if anything were to happen. Part of that estate is healthcare. And I would say healthcare is another important decision that you want to talk to your partner about. Right. Who has what job, who has the best coverage, what's it going to cost us, etc.
That's true, because you don't think of it necessarily as a financial topic, but it is so intertwined.
Very intertwined. And especially after you retire, way down the line, healthcare is going to be a very big expense.
So ABCDE, skip a couple H. It rolls right off the tongue.
So easy.
That's such a good guiding principle. Amazing. I want to take us back to maybe the dark side, because we've brought up the term financial abuse a few times, and then we'll go over to the good things that can happen from joint accounts. But a friend of mine who unfortunately recently went through a divorce, when I was talking to her about this episode, actually said you should really dive into financial abuse, which was a term that I actually hadn't heard, but it means the use of finances to harm someone. That can look like going into debt intentionally or withholding money intentionally. Can you explain a little bit about what that looks like and what someone could do if she's noticing signs of that already, or she knows that she's in that situation?
Yeah, that is an emotional one for me because I feel so protective of these women in which they're already in this situation. It's extremely difficult because if you have a person that you already don't trust and or they're using it as a power lever against you, the trust is already gone. So that becomes really sensitive in the way that you want to handle it. I would say, first and foremost, try not to focus on what you don't have control over. Move into, what can I do today to give myself a little bit more power? Because right now I feel powerless and somebody is doing egregious things against me, and that makes you feel a way you don't want to feel. So I would say step one is go open another account for yourself, and anytime you can put money into that account, just start to slowly do that. You can feel like you have a little bit more power versus powerless. And again, back to checking your credit report. Is this other person opening credit lines in your name, incurring debt with your name attached to it without you knowing? I have seen that happen. So it's important to check that annually. And even if...
Can someone go in and check to see what lines of credit have been taken out in their name? So say your partner does that. How do you do that? Do you go to your bank? What does that look like?
You can go on your credit report and it will list every single line of credit that you have and in your name. Anything, your social number.
So that's inclusive of things like credit cards, but also loans that have been approved through, etc.
Yes, and the most abusive case that I've seen is multiple lines of credit via credit cards being opened without that other person knowing, and then perhaps maybe you catch a bill in the mail and you're like, what's this? One of the ways that you can be engaged on your own side without that other person really being involved is that annual credit report. And then there are a lot of resources out there to help you repair your credit. If it can't be fixed, how are you going to start a plan to try to de-link yourself from this person and start over without causing a bad situation?
Would you recommend then, so looking at this on a like preventative side, would you recommend that if you are wanting to take out a loan or a mortgage to buy a house, that your name and your partner's name is on everything? So it's not under one person or the other. Is that something that we should be thinking about?
Yes. Anytime you're buying something that large, cars, houses, you want both of your names on it.
If one person has bad credit because maybe they have huge student loans or something along those lines, my guess is that's when something might happen where, okay, you have bad credit, but I have good credit, so let's put it under my name. How do you handle a scenario like that?
Do that, get the loan under the good credit, own it for a little bit, and change the title.
Okay. And when do you know to change the title?
Like after the first few months.
Oh, so you can change it whenever you get the loan and then you add the other person on after the loan's been approved.
Yeah.
Got it. Okay. That's clear.
Great to know.
Yeah.
That's interesting. That also brings us then to the good side of joint finances, meaning that in a partnership, typically you can afford bigger things. You can save towards goals. Hopefully it's also a very positive experience where you can approach and hopefully achieve some of your bigger financial goals, like buying a house, buying a car, starting a family. So how do you advise your couples to start those conversations?
I would advise working with a financial advisor because there are many different aspects that you need to consider. And we're going to look at things like your income. How much are you wanting to save? What's the top goal? How are we going to get there? Is it having a kid or is it saving into retirement plan? You always want to save into your retirement plan. You don't want to ever not do that. And so depending on incomes, it's really a matter of going through with your financial advisor and saying, what are you comfortable with saving up for buying a car, buying your first house, and then making sure that those dollars go towards those things in the most efficient way, depending on your incomes and the cash flow conversation that we were talking about earlier.
And how much money do you need to have a financial advisor?
A broad spectrum, because there are financial advisors out there that work on a per plan basis. So they'll do a one-time plan and you pay a fee and then you're done. There are advisors like me that have ongoing management where you need assets under management and then everything else is provided. Financial planning advice, working with your CPA and your estate planning attorney to make sure that we've got all the boxes checked and covering your full financial picture. And those are usually assets under management type fees on an annual basis, and advisors have different minimums. Some advisors, I'll take anyone with $100,000 and others are $1 million minimum. So it really is a broad range. And I will say you can have a financial advisor with any amount of money. So it's just a personality match and a minimum match. And also advisors like me are case by case basis. I might have a client who doesn't have a lot of investable assets, but they're high income. So they need my help anyway. And I'm going to take that client on every day of the week. I want people to start early, be educated, and get that boost to have a successful financial future. Yeah.
I think that's what we're seeing with a lot of our friends at this age, late 20s, early 30s, where you're just starting to maybe siphon away a little bit of savings, starting to have a little bit of disposable income. And we have a lot of friends who are saying, I have X amount to invest, even if it's $5,000 put away, maybe $10,000 put away. I want to start, but I don't know where to start. And so we're going to have a whole other episode on that, on what the fuck is a mutual fund, what the fuck is an ETF. But all to say, anyone at this stage or at any stage, it sounds like, can find someone who's a good fit. And what would you say is the most practical way to find someone? Is there a website, just searching RIAs around you? I guess people do it a lot remotely these days. So how do people find you?
There's a couple of websites, and I would recommend for everyone listening is only work with a fiduciary financial advisor, because they're not going to be selling you any products. They're not going to have any corporate obligations that they need to put in front of you because the business needs to make money. So fiduciary first that you can go to find someone in your area is NAPFA.org. That's National Association for Personal Financial Advisors. And all of those advisors are fiduciary, and you can just put in your zip code and it'll give you a list of 20 or plus. There's Fee Only Network, just all one word, .com, and you can search their directories. Those are all fiduciary financial advisors. And I believe there's another one called Find My Fiduciary.
Perfect. Super practical. For any of your couples, do you have any apps or tools that you like them to use for even just budgeting and tracking?
Oh, I may not look it, but I'm old school.
Don't look it.
I'm 47. Confident about your age, people. I never want women to be, I can't say my age.
That's true.
You're allowed to age, people.
Totally.
Love it.
I have not found one app that I absolutely love.
I don't have any that I use religiously. I don't know, Caitlin, if you do.
We do have a spreadsheet, but there's something in Canada called Wealthsimple. It's a robo-advisor. It also allows you to do some of your own trading and buying ETFs yourself. And the way they lay it out has been really useful for us to see our assets, and at least having it all in one spot, which I know some people say having all your money in one bank is very risky. The person who told Lundie and I this has a lot of assets. And so they were like, diversify, put it in multiple bank accounts. But at this moment, that would be much too much admin.
I'm like, I don't have enough money to spread it around.
No, exactly. Note to self, when I make millions of dollars, put it in more than one bank.
And I would speak to that. I know what they're talking about, the FDIC insurance coverage for your cash. But there are other things that you can do to kind of have one platform that invests in multiple different banks for you.
Oh, cool.
So that you don't have to go on and have 50 logins yourself. And one of the companies I work with is called Flourish Cash, and they will do that for you. And it's a really good platform for kind of keeping that cash. It is cash, but it's earning 4%, which is only a little bit less than what a money market fund is earning right now. So
good to know. Such good info. I feel like I have so much to talk to Luke about after this episode. If there was one thing that you could tell young women in the world, or any women who are starting to look at managing their finances and specifically merging their finances, what's one thing you would want them to know? You've touched on a lot, communication, which I think is amazing, keeping an eye on things yourself. What's your biggest lesson?
This is a perfect question, because I tell my 9-year-old niece this all the time. Be financially independent before you join into merging finances with someone else. It's just like that airplane metaphor. Put your mask on first. If you are financially independent and doing your own thing when you meet someone or in the process of meeting someone, you're much more confident when you merge your finances together. If you are not knowing what's going on and you don't know how to check your bank account and you don't know where to get your credit report, it makes it a lot more difficult. And then that's where that distrust starts to work its way in, because you don't know what you don't know. So there's a lot to know. Believe me, I've been in it for 20 years and I'm still learning, and things change. Obviously, they change a lot. So my top recommendation is be financially independent and stay engaged in what's going on in your financial world. So
Yeah, that's amazing. So it starts with yourself, essentially. Even before you even get to the
It
partnership
does.
conversation, it starts with yourself. I think that's key and something that a lot of people need to hear.
Just
Yeah.
one quick question. What does being financially independent mean?
Can you pay your own bills without help?
Mm-hmm.
Do you know how much you make? How much you're saving? Do you have financial goals? What are you working towards for yourself? Those are kind of just baseline items that should be established before you try to merge with somebody else. What I've seen in all my years, the couples that are the most successful enter into these things in that way.
Mm-hmm.
They're both completely independent, confident. This is a confidence thing for a lot of women too. You want to be sure of yourself because then you're bringing your best self to that relationship. And I don't want to get into relationship advice. I just feel like when you do tick those boxes and you are financially independent, you're just a more confident person in general.
Totally. Totally. No, absolutely. And you said actually something that we've been repeating a lot, which is that you don't know what you don't know. And that's honestly a huge reason why Caitlin and I decided to start this podcast, because we just feel like there's enough that very capable, intelligent, independent women just don't know because they don't know. And so that's essentially why we're here and why we brought you on. And why this has been so interesting and why I have a lot to take back. And Caitlin, I think you too. I'm excited to share this.
Totally.
So finally, Shalina, where can people find you and Martos Wealth Management if maybe they're in your time zone or want to work with you?
I work remotely across the entire United States. So you can find me at www.martoswealth.com. And then you can also find me on any of those fiduciary websites that I mentioned. You can find me on LinkedIn as well. Send me a message. Happy to chat.
Awesome. Thank you so much for joining us. I'm very excited. I didn't know how this was going to go, our very first episode. So thank you for all the wisdom. There's a lot to take away.
Thank you for having me. I mean, this was the best first podcast. And, if we can all support each other, we're golden.
100%. Thank you so much, Shalina. Have a good rest of your day, and we'll hopefully chat.
Thank you. Thank you so much.
Thank you.
Okay, chat later.
Bye.
Bye.
Bye-bye.
Welcome to the Debrief, where we discuss things we needed a little more clarity on.
We're back in new clothes because I didn't leave my computer screen on, and so my video for the recap last week did not record.
We are back, but the good thing is we now have more questions.
We're learning.
Okay, so I have a bunch of questions from our chat with Shalina and a few clarifications. So we can do this live and learn together. Yeah. I'm going to open up ChatGPT. First one was, we did say what a definition of an RIA is at the beginning, but I'm going to do it again. So what is
Registered Investment Advisor.
Perfect.
What is it? What does that mean?
What is a registered investment advisor? Person or firm that provides investment advice to clients and is legally registered with either the U.S. Securities and Exchange Commission or the state security regulators. So this is a U.S. term. In Canada, they're called a portfolio manager. They also have a financial planner or a financial advisor, and that is regulated by the provinces, which is our states. The portfolio manager is regulated by the Canadian security administrators. So same type of regulation that the registered investment advisors in the US have. In the UK, they have independent financial advisors, an IFA, regulated by the Financial Conduct Authority. Okay, so when you're looking for an RIA, if you're in the US, it's an RIA. If you're in Canada, it's a portfolio manager or a financial advisor or planner. And if you're in the UK, it's called an independent financial advisor.
What is a fiduciary RIA? That is what Shalina is and what she recommended everyone look for. And what makes someone a fiduciary advisor?
Okay, so a fiduciary IRA is really just a registered investment advisor acting under its core legal standard, the fiduciary duty. Fiduciary here means that they must always put the client's interest ahead of their own. We spoke a lot about credit scores. So what is a credit score? Okay, so a credit score is a number that represents how risky or safe you are to lend money to, essentially your financial trustworthiness. They usually range between the numbers 300 and 850 in the US. The higher, the better. The purpose of this is that lenders, landlords, or sometimes employers use it to decide if they can give you credit. That means a loan, a mortgage for your house, or access to a credit card. And that also depends on what interest you're going to pay. So if you have a lower number, meaning closer to 300, it means you are higher risk, which means you might pay a higher interest rate, meaning your loan will be more expensive. If you're closer to 850 or on the higher side, you are likely to pay a lower interest rate because you are less risky for the lender.
Makes sense. And Shalina said that once a year for free, at least in the US, and there may be equivalents elsewhere, you're allowed to check your credit score. Can you please ask why only once? Why is it free? Why do you have to pay to check your credit score? That's what I want to know. In my banking app, which is Chase, you can click a button that says check your score. And I'm wondering now if I've paid for it every time I've checked it. This is definitely it's been more than once a year.
Okay, so the scores are owned by scoring companies. In the US, the formulas are trade secrets and lenders pay licensing fees to use them. So when you want to see the score, you often are paying to access the proprietary calculation. So they have created a special formula to figure out your credit score, and then they make people pay to access.
So they have a secret formula as to how we get to understand our own money and credit worthiness, and then you have to pay to understand that. That's great.
Literally gatekeeping at its finest.
Cool. Great.
Yeah. Okay.
Yeah. I have a question. Do you get a credit score as a couple based on joint accounts or credit cards, or is everything individual?
The couple based on joint accounts. Okay. No, in the US and Canada and the UK, credit scores are always individual, even if you share accounts. How it works, each person has their own credit report and credit score based on accounts tied to their name and social security number. Joint accounts, like a joint credit card, mortgage, or loan, show up on both people's reports, and the account history affects both sides. If one person misses a payment on a joint account, both scores drop. So keep your partner accountable.
Hectic. Okay. So that's why you got to keep an eye on it.
Yeah.
And interesting that Shalina said when you make a big purchase, it can be done initially under the name of the person with the better credit history, so you get a better interest rate. But then after the fact, you can change the deed. What is a deed?
What is a deed? Oh, yeah. A deed is a legal document that provides ownership of real estate.
Got it.
I have lots of questions. So we spoke about estate a lot. So as in your estate as a couple or an individual and managing that. I just want clarity on what is an estate and what falls underneath. Okay, so an estate is everything a person owns or controls at the time of their death. Morbid. Or sometimes during life in the legal or financial planning context. So what falls under that estate umbrella? Under assets, it's real property, immovable assets, meaning homes, condos, land, buildings. Also, it says mineral rights and water rights. Interesting. It's a niche
What does that mean?
asset.
What's a mineral right?
Rights. Maybe if you have land on a gold mine or water rights. So maybe you have ownership
Access to a private beach?
Yeah, or part of a river that people need to cross and they must pay you a fee like the medieval times.
Will you clarify that so it's not just us being
yes.
Maybe it's a river.
Mineral.
During the gold rush.
$2 to take my bridge to get to the other side. Okay.
Yeah, please clarify.
Okay. Mineral rights and water rights are special types of properties that give someone legal control over resources below or within the land. I keep thinking of Yellowstone, how they hold all this land and then there's oil underneath.
Totally. I think that's what it is.
Yeah, don't mine my land. Here we go. Definition: the legal right to explore, for extract, and sell minerals beneath the land. Examples of minerals: oil, ding ding ding, natural gas, coal, gold, metals, stone, and gravel.
All right. So if any of you guys are living on a gold mine, that's included in your estate.
Yes, exactly. Okay. Good for you. We're happy for you.
I know, I'm jealous.
Still under assets is personal property. This is referred to as movable assets. That means your bank accounts, your checkings and savings, your investment accounts, that's your stocks, bonds, and mutual funds, retirement accounts. Oh, interestingly, vehicles, jewelry, art, and collectibles also are under personal property, meaning movable assets. Different than the real property, which is home, condos, and your rights to your gold mine. And then digital assets, that's cryptocurrency, domain names, interesting, and social media accounts. So when we see all those influencers that start as couples and then they split up, something to think about if you're a influencer with your partner who owns the rights to that social media account. Get it in writing. So number 1 was assets. Number 2 is liabilities. Debts owed at death. So liabilities means your mortgages, your credit card debt, personal loans, car loans, taxes, and unpaid bills. Then third is your rights and interests. So legal claims owed to a person, e.g. a lawsuit settlement, royalties from intellectual property, and leasehold interests. Don't know what leasehold What is leasehold interest? A leasehold interest is the legal right to use and occupy property for a set period of time under a lease agreement. So just to summarize, what falls under the estate umbrella is number 1, assets, number 2, liabilities, number 3, rights and interests. My takeaway about merging from what we know from Shalina and from this is that logistically, it seems easier because you're looking to fewer accounts. Transparency is higher, so it lowers the risk of something being sketchy. And if something were to go wrong with your partner, whether they get sick or something terrible happens to them, you have access to their accounts easily.
There are 3 key takeaways from the conversation. First being that financial infidelity in your relationship can be avoided through your own knowledge and independence. So first and foremost, checking your credit score once a year, having an understanding of where your money is, and then asking your partner to do the same so that there's transparency and general knowledge of what's going on with your money. Then when you approach the real conversation with your partner, make it fun, have a glass of wine, approach it with openness, and go through the ABCDE, skip a few, H method. A is assets, B, beneficiaries, C, cash flow, D, debt, E, estate, and H, healthcare. Make sure you do that. And then the third key takeaway is that anyone can have a financial advisor. You don't need hundreds of thousands or millions of dollars to get started. Use one of the websites if you're in the US that Shalina recommended. We'll make sure it's in the info below, or search for an equivalent in your country and make sure that you're looking for a fiduciary advisor, meaning that they're working in your best interest. And you can start with any amount and that'll get you closer to your goals. All right. Thanks for joining. We'll see you next week.
Thanks, everyone. Yeehaw. Let's go.